All right, guys, what's going on? What's good? What's good? It is Monday, February 26th. February 26th. Hope you guys had a good weekend. I know I did. You know, with the rental car, been whipping it around. Bitch ass homeowners association gave me a sticker, said you can't park in the fucking, I don't even want to talk about it, but other than that, my weekend was good, man, and I hope you guys had a good one as well. What did you guys do this weekend? Let me know. What's good, Kevin? Ravindran, Kevin, welcome to the SMS community. But hello to everyone else as well. Felix was first today. What's good? Willow, Monkey, Zakjo, Martin, Leon, Vadu, G, Nina, Nikki, Marshall, Eli, Alex C, Marius, Maximiliano, Ibranith, Naruto, our newest one, Ravindran, Kevin. I'm just gonna say Kevin, that's a lot easier. What's good, Naruto? Nicole, I think you're new as well with the bronze sniper, so welcome if I haven't welcomed you already. Need some shrooms in this playlist? Oh, I can give you the playlist, my friend. I can give you that. What's good, Sean? C Trades, Dante, Infinity, Lucas, Akinola, Jeff, and Trillionaire. What's good, everyone? Man, it's a good thing you can't hear the music right now. It's fucking nasty. But it's cool. I like listening to this kind of stuff. I found a new band called Diamonds to Dust. So they're a Christian band, but they are disgustingly heavy. I've been enjoying it. Friends Dirty 30 went to was that it sounds like a bar or a club. Had a little hot tub, whiskey, and sauna action. You know what? I wasn't going to get into it today. I did buy a bottle of tequila. Got El Padrino. And I did buy a sampler bottle of, oh man, Woodford Reserve, I think is what it's called. Tennessee whiskey, bourbon, whatever. Oh man, it's good. Like, I tried it and then I looked it up online and it has really good reviews. I'm like, okay, I can see why. It's good. Excuse me. I took the trade in the gap. Why is your stop loss there? I don't know. Just felt like having it there. Let me turn my mouse on. I wanted to enter at the gap. Let me explain this. I mean, that's what I wanted to do here anyway, but I wanted to short the gap. I was a little bit late and I wanted to get that next candle entry, but it sold off. I'm like, oh shit. Okay. So I went ahead and went with the up candle here. Actually, my entry was a little bit better than that. It was like right here, or so it was like right inside that candle. So I probably should have put the stop here, but I wanted to base it off this gap just in case it came back into that. So I wanted to treat this gap like an imbalance, and therefore my stop would go to the high end of that candle. So it might be off by like a point or two, but the drawing tool wise, but as far as the the orders go, it does look something like that. So that's almost a 1 to 4 based on something like that. So we have some gaps down here as well. It looks like it's trading back into, but I mean, it's the Dow. It's going to gap a lot here. So if we zoom out just a little bit, we can kind of see what that looks like. And we have some liquidity up there that was taken this morning. So that was the premise for that right up here. Does that make sense? There's a 15-minute gap right there too. So imbalance, or sorry, there's an imbalance here as well on the 15, imbalance here on the 15 during lunch, gross. And then we actually traded a little bit lower. We took some short-term lows. So this may retrace higher. It's fine. I think the stop is like 10 or 15 points into profit. So it'll be a W on the day regardless. But to me, it just doesn't make sense for us not to grab the equal lows. We've definitely crossed the 50% and retraced into there. So this should see us a bearish PM session. But if it comes up and gets me out, then so be it. I tell you guys not to swing for the fences. I'm swinging for the fences today. I don't care. I'm swinging for it. I don't want first base, second base. I want the home run or nothing at all. So that's kind of the idea behind today for specifically for the Dow Jones. So there is that. The S&P, if you remember from last week on Friday, we drew out grabbing that high, trading lower, retracing, trading lower, retracing, and then hitting the lows, right? We didn't do that until Sunday evening. So that to me is kind of weird, and I don't really care for that. But that panned out pretty to the script. So it's just unfortunate when it does that, especially like this bullshit right at the end of the stock exchange hours. Like that shit sucks. I hate that. But you know, either way, that inversion here, that inverted imbalance here still set that high, and there was some opportunities to short, but just not, it ain't always going to be, it's not always going to be like this, you know, where you get that banger entry and then it just sprints your direction. It's not always going to be that way, unfortunately. So today looks pretty good. If it runs this high, I'd be okay with that. But as long as it doesn't trade like too far above that, I think I'd be willing to hold this until the lows. But if we do leave that open, that's still going to stay on my chart until we get there. Make sense? But that's why my stop is there. What's good, say? Reading like hell all weekend. That's good. What are you reading, Lucas? What's good, Sandro? Alex likes Woodford. Okay, very nice. I like it. 39 to 80 quarter level on Dow. 80 level, sure. Quarter level is going to be 25, 50, and 75, or 0, but the 80 level would work as a 80 level. So you're talking about up here, like running the highs and then tagging the 39 to 80 level. Is that what you meant, Lee Bright? Up here? Like that? To be fair, I didn't even notice that. I didn't really care, but the gap is what sold it for me. No pun intended. But the gap is what, you know, put me there. As far as wanting to be bearish, that to me was the low risk sell, right? Price trading lower and then trading into that gap. That is a premium gap, right? Yeah. So like I don't want to see his fucking rally, but you know, that's the low risk, right? Either shorting the gap or just after it. So Again, I wanted to short the gap. I was a little bit late to it. It kind of just wicked in there, and I was cycling through the other indices too, so I just kind of missed that. But yeah, that's basically the next candle entry, as well as a up candle entry as well. Make sense? But yeah, this low would probably be a partial. This low is definitely a partial. So this is the only thing about trading one contract at a time. If you ever trade one contract, it's all or nothing. So that's why I said I'm swinging for the fences today. I either want the super, 1 to 4, no drawdown banger, or I'm going to get stopped out in profit. So it's all gravy. Went to my school today. They called me on Thursday or Friday last week. They said they had a check for me. I said, are you sure about that? Are you sure about that? And they never answered the phone. So I had to go up there today. Walked up there. I said, what's good? So they had two. They had 2 checks for me. So needless to say, it's a banger day already. All right. So I'm just trying to hit 2 home runs in one day. You see what I'm saying? I'm trying to hit multiple home runs today, chat. We already got one. Let's see if we can get a second one. A book about gold and a copy of Psychology of Money. Oh yeah, Morgan Housel. To be fair, I read The Psychology of Money in like 2 days. It was a very easy read. It was good, and then like the second to last chapter was definitely a drag for me, and then the last chapter really ended well. So that book was kind of like this. I'll draw it for you. It was pretty good, and then it got boring as fuck, and then the last chapter brought it home for me. That's how that book was. Because he wraps up the last chapter with like a whole bunch of points. I said, okay, it's pretty good, and one thing I will say too is I do think that book is overrated. It's a decent book. I've read it. I enjoyed most of it, but I think that book's overrated. Personal opinion. Rising interest rates have a slightly bearish effect on the price of gold, ? That is an answer, or that is a question I should know the answer to, my friend, and I'm going to be creamy with you. I don't know. I don't know the answer to that. So I wish I knew, but I do not. You might have to look that up. And I hate telling you guys that. Like, I hate telling you to go Google something. It's just, in all honesty, I don't know. And I'm not going to try and make some shit up for you. So, apologies, but I don't know the answer to that. I'm sorry. I do not know, my friend. So, as far as the other indices go, let me see. We definitely have some shenanigans over in the Nasdaq and the triple Qs. I haven't looked at. I was out and about, and I wasn't watching on my phone today. I usually would do that. I wasn't doing that today. I said, John, you're not going to do that bullshit today. So we have a high. We have a higher high, and then we have a third higher high. We break down. We retraced. Now we're selling off a little bit. So that probably would have been an okay short based off that up candle. We didn't really take anything, though. We didn't take anything over here on that side of the chart. No, we're kind of outside of the scope of that as well. Okay, well, shit, I don't know then. I guess with the other indices lower and the Nasdaq, let me just make sure that's correct. Yeah. Okay, so with the Nasdaq being the only index that is higher and then making that third higher high formation, that would have really been it as far as justification for shorts. So look at the Nasdaq Nikki, the 4 hour. That's disgusting. Why do you guys like the 4 hour? The 4 hour. So last week took that previous week's high. I think. I don't know. I've got it labeled like that. I'm assuming so. I could be wrong. It's always on the table. But I guess we're in this up candle as well. So, I mean, is that what you were wanting to for me to look at? I guess that could probably be a possibility. You cut that in half like a pizza. Cut it in half like a pizza, chat. Boom. Smacks halfway. I mean, I guess, but that range is ridiculous. You have shit, dude. Y'all ever trade Nasdaq futures? Oh, fuck, bro. It's a large range. This isn't as large of a range, which is cool, but okay, yeah. I mean, excuse me, sorry, I just had lunch. Got Subway. It's not bad. I mean, it's not terrible. It's just, for me, I prefer runs on liquidity. Right? Like this little thing right here. Look at this. Right? Look at our high of the day for the S&P. Look at this. You see that little run right there? You need to get a soundboard as well. That, right? Look at that wick retracement. We sold off aggressively. Like that, to me, that's what I like. I like runs on liquidity, especially higher time frame. And Dow, to me, was the only one that had that, as far as any sort of liquidity run was here, right? From Friday's PM session, we had probably some stops here. That was traded into expeditiously at the equities open today. So I feel like anybody who longed the open, their stops are going to be below London's. That's London's low as well, and Sunday evening's low. So to me, there's just a massive pocket of liquidity here. And I don't even think we're going to stop there. We'll probably go ahead and take some of these other lows too. So we might not even stop at the 39,100 level. We might even go down to the 80s or even the 50, 39,050. I don't think I'm going to hold for all of that, though. I do have an order at 39,100, and that's going to be enough for me. So maybe a soft home run, not like an over-the-fence home run. Not quite the parking lot, but maybe like the first couple rows of the stands. You know what I mean? Like that's the goal here. Shit, I didn't even check if we had news today either. I didn't even check if we had news, chat. Oh, we don't have nothing today. Durable goods tomorrow, whatever that is. Consumer confidence. And then in the evening time tomorrow, we have CPI for Australian dollar and cash rate for New Zealand. So just be mindful of that tomorrow if you're trading Aussie or Kiwi. Preliminary GDP on Wednesday. GDP for CAD on Thursday. And then 9 a.m. on the 1st, we have ISM manufacturing PMI. So just make sure you guys are checking your news events, your economic calendar. You know, I blame you guys too, because I recorded this whole thing up until we had to stream. Then I stopped the recording, but I recorded all this. It's your fault, chat. It's your fault. I could have said, screw the stream. I want to record. So let's see if we get that run to 39. If we pause here in reverse, I am going to call Jerome Powell. They call him a scammer. Let's hit those lows, baby. Let's get that 100 level. Watch, just gonna pause here, come all the way back and hit my stop. You know how it is. You know how it is, chat. You know how it is. Pause one or two ticks. Come get your ass out. I wonder if ES took the lows. Oh my goodness. Sheesh. See ya. Goodbye. Whoop. Beautiful run on those lows over on the S&P side. That was the move we were looking for Friday that we didn't get until Sunday, bitch ass. But oh, look at that. Nice little run for the ES side. Nasdaq back at 18K. Probably some stops here, probably some stops here as well. This is our equities open. Liquidity probably here. And then AM session stops here. So we'll have to see. Let me catch up in the chat just a minute. I want to see if we get this run. Unless ES is just going to stop running and then Dow just doesn't do it and we diverge to go higher. I hope we don't do that. I sure as shit hope we do not do that. I'm biased, man. I'm biased. We stopped 8 points short of that. Of the 100 level, sorry. 3 points short of the equal lows. So, but have no fear. Have patience, my friends. Have some patience. This candle has no wick on it either. Right at that 1230 as well. Ooh. Oh no, it's not even 1230 yet. What the fuck am I talking about? At 1225, sorry. I know it looks like I'm a time traveler, but I promise I don't time travel, okay? That's 1225, sorry. That's our current candle. My bad. But yeah, we'll see. Google says that interest rates and gold move in opposite directions, so rising interest rates means a falling price of gold. Well, gold's at all-time highs and interest rates have been rising, so I'm not... I don't know, Lucas. I don't know. What's good, Stephanie? Lucas long Nasdaq today. We'll take a look at it in just a minute. I want to see if we can get our home run. I want to see if we can get it. I hate when that happens, and it'll be when I get up to tend to my son. You know, it do be like that, Nikki. It does happen that way. What did you do, Lee Bright, on Nasdaq? What did you long or short? You guys are in the Nasdaq sell as well? Well, damn. That's good. Which one? Yeah, see, I hate when price does that. It stops like one tick of liquidity and then just reverses. Hate that. You know what? Oh, okay. Well, I was out of the house, but there is a gap right there. on S&P. It just did not push past that. Late AM session, part of lunch, drops, retracement, and then that one we just, the short little sell-off we just got here. I guess. Did anybody look at currencies today? Is anybody trading currencies today? Or metals? Off the imbalance you have marked up with the green line. Oh, okay. Very, very nice. Very nice. Eli says it's been real sloppy the last 2 weeks. What's been sloppy, my friend? There's about 10 different jokes I can... What exactly has been sloppy, Eli, with the price action? And we're going to skip all the NSFW jokes. Just breeze right over that. Kevin shorted euro. I haven't looked at currencies today, but I will take a look. Oh, we crossed the lows. $105. What'd we get? 102. We only got to 102. Are you? We'll give it some time. We'll give it some time. The target was the equal lows of the consolidation shortly before. Yeah. Oh, did we get it, chat? Yeah, buddy. 39,099. You bitch. 4. Look at that. 1 to 4, chat. Let's fucking go. Let's go, chat. Big blessed. 2 home runs for the day, baby. Let's go. If you guys are blessed, man, drop a blessed emoji, dude. Drop a Where's that? Drop a blessed emoji in the chat. I was watching, I watched, I think, Tanya for like 10 minutes. I think she was longing in here or here. I think she was longing in here. Or was that a 1 minute? To be honest, I don't even remember. I think she was longing Nasdaq today. And then I said, fuck that, I'm going short. Bam. Bam. Now I'm done. Although, again, as I mentioned, I could see the 80s. I could probably even see the 50s. Because if we zoom out, look at all these lows consecutive. You got an imbalance down here as well. So I see no reason to stop right there. I see no reason. Look at that sell-off, baby. You can't predict the markets. You're right. It can't be done. Nobody knows how to do it. There's your run on the AM session lows. Like an intraday lows. That would be a partial easily. Next up is probably going to be our equities open low. If we are going to do that. Do you guys like this triple high formation or what? Are you guys glad I told you about that? Someone messaged me today and I mean, she gave me an excellent compliment. It was like a 4-part compliment. And one of the things that she said was that I'm not a gatekeeper of information. She said, I'm not a gatekeeper of information. And I said, well, thank you. That is was one hell of a comment. It made my morning. Why would I? I'm trying to teach you how to do this. Even though I got out a little bit early, that 80 level I said could be on the table, and we are there. I still think that 50 level could be on the table. So that 80 level would have been an extension, 1 to 4.5. And then that 50 level would be a 1 to 5, but I'm not trying to swing that far, chat. Far, but not that far. This was fine. So now, if you were watching this, which you should have been, because I do this shit for free, I told you about these gaps in here, didn't I? Didn't I tell you about those 2 gaps right there? Why do you think I'd tell you about that? Why do you think I'd tell you about that? Oh, well, John, there's a high, low, higher, high. So, you know, this could be a potential mitigation. Right. So a gap within the mitigation is the mitigation model, isn't it? That was at 12:10 p.m. session. Above p.m. session open. Look at these last 5 or 6 candles. Straight down, baby. Straight down candles, my guy. Mitigation model. You saw it live. I didn't tell you to enter. Didn't tell you to trade it. That's not what I'm here for. As much as you guys want that, I said, I think it's going lower. I pointed out those gaps to you. Why do you think? Granted, it's going to gap a shit ton, but I pointed the one out here, and I pointed right there to you. Live. I said, there's gaps right there. It's coming back for. Came back for him, and then absolutely ripped ass lower. For free. For the free, chat. So, anyways, now that that's been taken care of, let's go investigate what you guys were talking about for the Nasdaq. You guys said you were long this morning, which is interesting. I'm surprised, to be honest. I am a little bit surprised. Number one, I didn't wake up on time, so maybe that's not a surprise. But as far as hearing that you guys longed, I am a little shocked. What did y'all see here? What did you guys see for longs? Because in my eyes, we had some lows down here and down here, and Dow had lows as well, which means I wouldn't have been looking for longs. Oh, well, yeah, this is kind of shaky. This is kind of shaky. I think I was out of the house by this point. We swept a couple lows, left equal highs, cross 50%. Yeah, this just doesn't look. I don't know. I tell you what, Librite, why don't you post in the charts Discord, charts chat Discord, and because I want to take a look. I'm not saying that you're wrong. I'm not saying that you're wrong for longing. If you longed and made money, good for you. That's a good thing. Me personally, I don't see why somebody would long. I think Tanya did as well. But I can guarantee, and again, please don't take this the wrong way, but I guarantee you would have made a lot more money taking the trade that I took. Again, I'm not saying I'm the best trader in the world. I'm not saying, none of that. I'm just saying specifically today, you would have done way better shorting Dow than you would have longing Nasdaq, in my opinion. Jeff longed this morning. Oh, you longed at the bell? On which one? On Nasdaq? Well, the bell for me is here. So it just depends. I usually don't enter right at the open. If I enter at our opening price, I'll get fucking wrecked. Because it has a lot of volatility the first 30 minutes, usually like the first hour. But the first 30 minutes can almost always has the most volatility during the day until you probably get to about the final hour. But majority of the time, the volatility is going to be the first 30 minutes. But again, like I said, more power to you. I just don't do that. Our opening is here. So like opened, traded higher, did this bullshit, and then traded lower for stops here. But no, I'm always curious to see what other people do and how other people, you know, take trades. You know what I'm saying? Liquidity trades 30 minutes after the opening, no matter what the market does. I like it. Got stop loss in that Dow 5-minute mitigation exactly at that candle's high, 39,192. Well, for me, that's like here. So, but yeah, that, I feel like if I didn't short up here, that to me would have been the last opportunity. But all right, let me talk to you for a second. I know I called it Mindset Monday. I haven't said anything about mindset. I definitely fucked that up. I'm sorry. Let me put it to you this way. Before I give you my answer, what gives you guys confidence? What's good, Bruce? Thanks again for the 50 euros the other day. I greatly appreciate that. Thank you, thank you. You are a gentleman for that. But what gives you guys confidence in trading? And if you don't have confidence, just say that you don't have confidence, or just maybe not answer the question. But what gives you guys confidence? And don't say me. Don't be like, oh, well, you know, I just wait for you to give me a bias and then that's what makes me confident. Don't say that. Because I'm not always right. You know, I wasn't right on Friday. You know, even though we did take the high and then razzle dazzle down to these lows, I wasn't right because I told you specifically I wanted to see that before the close of equities, and we didn't do it. So I was wrong. I mean, I was right, but wrong. You see what I'm saying? So I'm not always right. But what gives you guys confidence? What makes you actually say, you know what? I'm going to press the button. I'll take the trade. Even if it's demo, I don't care. What makes you say, you know what? I'll do it. Can you say that you can stick to the market direction of liquidity to liquidity because I am currently having problems? Excuse me. Finding the right direction, and I am currently doing a lot of back and forward testing. Yeah, George. So I didn't short the S&P today. I didn't short Nasdaq today. I shorted the Dow Jones today. Why? Because look at the targets, my friend. S&P did have a nice target. I just don't like how we made the high. I just didn't. I looked at it. I made a conscious decision. I didn't want to go with it. The Dow Jones gave us perfect, identical equal lows. Perfect. I mean, there is no margin of error. The low, I can't even tell. The low, 39,105. The low here, 39,105. Those are identical equal lows. To me, that's a high probability target. I want to target that for the downside. But if the market's going to go lower, it's going to go higher first. Not always, majority of the time. We took higher, not higher time frame, but like we took a level of liquidity And you already know, I've been saying this for a long time. The markets move from liquidity to liquidity. You already know this. You already know this. It's in your notes. It's ingrained into your brain because I've been saying this all 2023. So that's what gives me confidence to say, okay, well, we yoinked some highs, broke down. All right, this gap is a low risk selling opportunity to run for these lows. Great risk reward. I didn't get the gap because I missed it. I hesitated a little bit too long. Not hesitated, but I mean, I missed it. I was watching the other indices at that time. I missed the gap. I said, okay, cool. That doesn't mean I'm just going to miss the whole trade. I mean, you're a fool if you think because I didn't get the wick entry, I'm not going to get in on the next candle. Screw that. Bitch, I'm getting in. Okay? Like, I'm getting in. Okay? It's the next candle entry, that up candle. That's what I'm entering on. But I'm okay if it comes back to the gap because that's what I wanted originally. But it never did that, so it just sold off. I was already out of the house by this point, so I missed all this consolidation. Thank God, because I would have been ripping my beard out watching this bullshit. And then, like I said, that's your first leg, right? Let's just delete everything. Remember, this is consolidation. You already know what happens around consolidations. Buy stops above it, sell stops below it. When we took this liquidity, right? What gives me confidence is not just my experience, obviously, but is the repetition, right? Because some of you said that. Back testing, right? Jeff's back testing. Confluence is another thing. Lee Bright said repetition of the concept or my concepts, right? Akinola said the fact that the markets repeats its patterns over and over again. Exactly. That's what gives me confidence to come on here in front of 60 people and say, I think the market's going to go lower. And then it does. Not always, but it did today, right? Because I know equal lows. I know consolidation. And remember we talked about legs before? There's your first leg, retracement, second leg. Low risk sell, or even like a late entry right there, the one that I took. And then that mitigation here is your second leg lower. That's why I pointed out those gaps, because that's the second leg. You can look at MMXM models. You can look at Wyckoff. I don't care. It's up to you. It's your trading career. Either way, it's better to have both legs of distribution or accumulation. But if you don't catch the first leg, you can catch the second. That's what gives me confidence. I done seen this shit so many times. I've called it for you so many times. It's just second nature at this point. Okay? That's confidence for me. Liquidity to liquidity. And that's it. I'm not looking for longs. I'm not looking to buy below these lows. I'm not looking, oh, divergence, Nasdaq stronger, I'm going to long. I'm not doing none of that bullshit. If anything, I think Nasdaq's going to go lower. Only because of the stops from the AM session. The Nasdaq is the only one who hasn't ran lows because it went higher first. And that's okay. It's also the strongest index, so you just got to be careful shorting the strongest index. But yes, that's why. Equal lows, that's my favorite target, or equal highs, that's my favorite target. Low resistant lows or low resistant highs are my second favorite target. Okay? That's what gives me confidence. But George, I hope that answers your question. Hopefully my trade plan when it finished. I'm not sure what we were talking about at that point. Oh, okay. Taking more losses than wins, knowing I can be net positive, those probabilities. No, I like that. I like that. Because even if you think about it, let's say NASDAQ for a second. Okay. I taught you, I don't know if it was last week or the week prior, but I taught you the 3 highs, right? The little ABC 1, 2, 3, right? I'm like, teach your toddler how to fucking trade, okay? 1, 2, 3, breakdown, retracement, see you buy. That's the easiest reversal pattern like that there probably is. Can you count to 3? You know what I mean? Like, can you count to 3? 1, 2, 3. Breakdown, retracement, see ya. Okay. 1, 2, 3. Retracement. There's your up candle. Fractal high, by the way, right? 3-bar fractal high at the 3rd high. So you could short the up candle, not financial advice. Just on a demo account, you can short the up candle. Low risk. You're not risking that much. Unless you're trading Nasdaq futures, then you absolutely are. It's probably a couple $100 right there. Okay. But even aiming for those new lows here, even that by itself is almost a 1 to 3 or 1 to 2.5. Right? If we were aiming for down here, like I said earlier, that's about a 1 to 4. So you only have to be right, I don't know, 30% or 40% of the time or something like that to be able to make money in the long run. That's why I like low risk buys and low risk sells. I want to enter near the highs. Okay. And I'm not saying that you guys have to copy me or anything, but think about the logic there. You're not trying to short the highest high. You can if you want to, but isn't it better to wait for the high to be set and then that next retracement is the one to go lower? The risk is predefined. You've waited for a specific pattern that repeats. That's presented itself. Nasdaq is the only index. Look at this shit. S&P's lower. Dow is absolutely lower. What the fuck is the Nasdaq doing? It's the only one higher. Why? It's an outlier. Because it's distributing. Anyone who shorted, bam, stopped out. Oh, anyone who shorted that retracement, bam, they got knocked out. Okay, now we're going to go. It's manipulation, folks. It is manipulation. That's why this pattern works so well. It's not 1, 2, 3, you know, short me or some shit. I don't just trying to be Dr. Seuss right now. It's not the fact that it's the pattern by itself. 1, 2, 3, yoink. It's the fact that it's the pattern, but it's because it's an outlier as well. If the other indices were higher, this to me wouldn't have meant dick. It wouldn't have meant anything. But because the Nasdaq is higher and the other 2 indices are lower, that's its sore thumb, bro. Sticking out like a sore thumb. Then you wait. You don't complain that the market sold off. Oh man, I'm not in it, bro. I'm not in it. It's gonna take off without me. That's a problem. Okay. If you think the market's gonna do that, you have an issue, my friend. But look at it. It didn't even cross 50% until this move here during lunch of all timing, right? Where's your premium? Here's your premium. Right? What did we say this was a 15-minute up candle, right? Yeah. All right. There's your premium institutional candle. Or you call it whatever you want. Okay? Boom. Simple. Simple ideas. Learning and applying patience is key. Yeah, I agree. Time and story behind price action. I agree. Do you only trade equal lows and consolidation highs or and lows, or daily highs and lows too? You know, to be fair, I usually don't target previous days highs and lows by itself. I don't know why I'm that way. I just am. I mean, this looks like almost like a stop run at this point. But I mean, if we're talking about trading, okay, and you want to just not lose, like if you're telling me, like if you came to me and you're like, John, I cannot lose, bro. I don't want to lose. I don't want to lose. I don't want to take any fucking losses. Well, number one, I'm going to tell you that that's impossible in the long run. Okay. Like you're going to take losses in trading. But if you want the absolute most highest probability setups there is, this is it. Okay. This is it to me. You are waiting for liquidity to get swept and then seeking opposing liquidity. If you don't have it, then there's no trade. So if you wait for only the highest of the highest probability, you're probably not going to trade every day. Okay? Especially in consolidation markets, you're probably not going to trade every day. But to me, like let's say you were managing an absolute shit ton of money. I mean like multiple lifetimes worth of money, okay? And that's what you wanted to do. That's what I would do. Wait for the low risk sells, and this would be inverted if it was on the buy side. I'd say, oh, we had some lows swept, we traded higher, there's a gap, that's a low risk buy, stop at this fractal low, retracement, this is lunch bullshit, we rally, oh, there's a mitigation. I know it's inverted, but you know, there's your gaps inside the mitigation to long. Okay, even though this probably would have been a scalp, same idea, right? It's the same thing, just inverted, right? Because this right here, I'm telling you, I promise you, and I don't promise a lot of things, a trade like this is enough for the week. Do you understand what I'm telling you? From, let's just say 233 down to 100. Okay, now watch this. This is 133 points. Okay. Oh man, John, that doesn't sound like a lot. That's not a lot of points, man. Right. 133 points, but it's $5 a point. So 133 times $5 a point is what? $665. You can be done for the week. Now that's just at that level. You know, that's not getting the gap or trying to extend down to the 80 level. That's just the bulk of the move and not trying to be too fancy with it. But that's over $600 in a couple of hours, right? From 9:40 to 12. I don't even know what time that hit. Under 3 hours. You could watch Godfather in the same amount of time it took to make $600, almost $700. Come on. Come on, man. But yeah. Do all of my trades go that way? No, fuck no. But the ones that I am patient for, the ones that I stalk, the ones that I wait for identical lows or low resistant highs or identical highs, those are the highest probability. Those I'm willing to put money on the table on. That's all I'm saying. So with that being said, we'll look at the dollar. We'll look at gold and silver, and then we'll probably take a we'll probably just, you know, be done, because that's it. That's all I have for you today. But yeah, for me, confidence comes from repetition. It comes from experience and just overall understanding the market. Same stuff, different day. All right. George says, my favorite is when the market makes the 50% test and then makes the run. Yeah, we need a name for that. We need a name for that. I don't know. I'm kind of tired of making up names, to be honest with you. it's a function, right? The mitigation model is called a mitigation because it's a function of price action. I did have a question on that over the weekend. It's because someone had asked me about ICT or all these other ICT traders and this unicorn model or whatever. And I'm like, bro, you can call it a mitigation, you can call it a breaker. I don't fucking care. Even if you want to call it a breaker, call it that. Its function is for smart money to mitigate their positions that they're either scaling in or scaling out of. That's the purpose of that. You hold on too long, the market's going to reverse. That last retracement is opportunity, not for you or for me, but for smart money to get out of their positions that would otherwise be underwater if the market were to reverse. I feel like that might have went over your head a little bit without a visual. I'm not saying you're stupid. I'm saying without a visual, it's hard. Okay. It, by definition and its basic outline, you're going to say, oh, John, that's just old support term resistance. I mean, you're not wrong. That is what it looks like, but you don't understand. Every time you see this formation is not going to work. But somehow when I point it out, it does work, right? Why is that? It's because time, price, and context, my friend. That's why. Okay? Time, price, context, and 30% off a liquid trader challenge if you use code New Year, by the way. But the context is the market's been trading higher and higher. It probably hit something on a higher time frame, meaning previous day's high, previous week's high, liquidity, okay? Now the market has shifted in price delivery, so that next retracement is an opportunity for smart money to get out of their current longs, because they could be long from down here, they could be long from here, they could be long from here. And this is an opportunity to exit those longs before the market takes a dookie, okay? That's the function of a mitigation. There's videos on that out the ass. I've done so many videos on that. I'm like tired of talking about it, to be fair. But I forgot where I was going with this. That's what gives me confidence for that, because it is a function, okay? When I was studying this for a long time, what I had also come to realize is that when I was taking some of those trades, I would take a loss and I'd be like, well, what happened? Why did I miss that? Part of it was context, but part of it is also understanding that there has to be a imbalance there. There has to be. If there isn't one, either switch your time frame. It's a fucking gem, by the way, or don't take the trade and wait for an imbalance to form either within a mitigation somewhere, either on the higher end or the lower end. But either way, there's got to be an imbalance somewhere, or a gap. A gap would work just as well. Okay? Just like you saw today on Dow Jones. But it's the function. Okay? You could call it a unicorn if you want to call it that stupid shit, or if you want to call it for what its function is, which is a mitigation model. Okay? It's not a Jon Fib model. I don't name anything after myself. Okay? It's just, that's that. All right? Oh, I thought we went down to the 50 level. We went up to the 50 level. Okay. Well, anyway. I guess that was good that I got out here then. Because now I'd be fucking mad that it would be going against me. But it's cool. Oh, that's right. I went on a tangent instead of looking at the dollar. Sorry. I do that sometimes. The dollar index. Weekly imbalance. We came off of that, but we also traded down to this down candle here on Thursday of last week, and we traded away from that a little bit. So I think it's hard to tell what we're going to do here for the dollar. I don't know. I have no idea. If I had to say, maybe long, but I don't know. Okay. I just don't know. So with that, that's probably going to be the same for currencies as well. Meaning, until we form some sort of highs or lows that I would consider high probability, I'm not doing anything with this. Make sense? So yeah, I don't know. We have some lows there on euro, maybe. Yeah, this looks this looks pretty bad too. There's some lows here on British pound, but I don't know. I just haven't really been caring for the price action we've been getting on currencies. What is this shit? What has been the last couple weeks, bro? Almost no expansion. Like, I almost feel like we get expansion and then come back. Then we get expansion and come back. And then get expansion and come back. Like, it's just a lot of whipsawing around. And I don't know. You guys good with that? You guys have any last minute questions before we hop off? I hope you guys enjoyed today. Drop a like if you enjoyed it. Even if you didn't trade, even if you just watched it today, that's still going to count as experience. I promise you. Don't take it for granted either. 5 years, 10 years from down the road, you're going to be like, yeah, I remember all those times, man. We used to watch this fucking bald guy on YouTube talk about liquidity. You know? It's going to count, bro. You're just not going to see the effects until many, many years from now. Just like when I gave you the mitigation model 2 years ago. Or it might have been a little bit less than that. But I gave you the mitigation model, and the first time I gave that out, I specifically said, you do not know what I gave you. You don't. You don't know. It's like giving a 16-year-old who just got their license a Lamborghini. They've never driven any cars before, so they're not going to appreciate a Lamborghini for what it is because they haven't experienced the other cars, right? I gave you a disgusting model, but you're not going to truly understand it till you give it time and experience. But that was it right here, in case you missed it. That was part of it right here. You had these two gaps within that down candle here. To be fair, we could probably put those two together. But both of those gaps were within that. And what did it reach for? There's no up candles here. None. No up candles in this movement. It went straight down. It acted as a magnet to this liquidity. That's the mitigation model. Again, you will not understand it until you take probably at least 10 trades like this. No, almost no drawdown, straight to profit. Your first time, I ain't gonna lie, the first couple of times you're probably just gonna get lucky. Because you may not have a liquidity run. You might just be on the right side that particular time. And you're probably gonna, attribute it to skill when it may have just been luck. But once you really start to look for it and you really start to understand it, then you take a couple good trades like that, you're going to smile ear to ear and be like, yeah, this is a model that could probably get me paid for the rest of my life. And it's not me. The mitigation model is just a model. It's there. It's not something that, is unique to me. It is a function of price action, and it's a function of price delivery. It's not me. It's just you're discovering how price actually moves. Who, what, where, when, and why. And when that clicks, it's just going to be a whole new world for you. So, anyways, that's it for today. I would still keep the Nasdaq lows on my chart if I were you. I really don't care how we retrace like that. But let's put an alert down here on Nasdaq. Let's just see if that hits later today. If it doesn't though, don't be surprised. Remember, Nasdaq's our strongest index today, so it doesn't have to, but I still think that third retracement, or that first retracement after the third high for the new lows, that to me was still a scalping opportunity. So, that's going to be it, man. But at the end of the day, study what you want. Pick your model. or pick your reversal profile, scenario, whatever. If you like the 3 highs, go with that. If you're just looking for stuff like this, maybe where you just need 1 high and then a change in price delivery to aim for lows, that's fine too. Or if you want to do what I did, maybe go for the gap. Or if you're late, you can go for that up candle. That's not late to me. You know why? Because that's still in a premium. Everything there is in a premium. Hell, even this imbalance is a premium. Gap, premium. Up candle, premium. All that shit's premium. All of it. So does it really make a difference whether you got the imbalance or a couple points better or a couple points better? Why does 10 points move? Or what, excuse me, why does 10 points matter in a 130 point move? That shit ain't gonna make a difference, bro. So pick your poison here, man. How do you want to enter the market? There's multiple ways. What do you want to target? There's multiple targets. Because I can guarantee you somebody probably didn't trade that because, oh, well, it didn't, there's no mitigation here or whatever, so I'm not going to trade it. And then they just watched it run to equal lows. And now they're kicking themselves going, why the fuck didn't I short that when I knew it was going to go lower? It's inexperience. I'm not trying to be mean. I say that with as much love as I can. It's just a lack of experience. It's okay. Even sometimes I miss trades too. It's okay. It's not a big deal. You just have to know, or in my opinion, you just have to know a little bit more about price action and its delivery techniques and the way it delivers. There's a lot of things here. I have over 400 videos on this channel. How many lessons do you think I've given on price action? At this point, I'm just kind of ranting, but you guys are still here, so at least you're not like hopping off. Do you think 50% imbalance / mitigation fills matter? I think so. I think it matters, but I wouldn't pay too much attention to it. Okay. Like say this up candle here. Let's look at a 1 minute actually. God, this looks horrible. Let me just give you an example, since you brought it up, and that'll be the last question for the day. Let's assume you use this down candle here. That's a stop run. You use this down candle. Let's say you use this gap right here. This is the first one. Didn't aim for the higher one. You just wanted to get in. You're like, I just want the easiest entry. All right. Well, you already know what the stop loss calls for in the model. Entry at the gap. Stop at this high. Hopefully you can frame a 1 to 3, or you're gonna have to define the redefine the entry or figure it out. But that right there is a 1 to 3. Earliest gap, loosest stop, you still hit a 1 to 3 on that. It wouldn't have mattered if I got a wick entry, the next candle went against me, and then the next candle after that, I'm in profit. And then it just drops. It's not that big of a deal whether it hit that and traded lower, or even if it went against you and traded lower. Because as I mentioned, there was other gaps in here. Okay? It's the Dow, bro. Look at this shit. 1, 2, 3, 4. It gapped all within this. I don't know why it does that. I can't explain it to you. That's just how the Dow Jones operates. It's going to skip price levels. It does what it does. I don't make the rules. Okay? There probably is a reason for that. I don't know it. And to be frank, I don't really care. But either way, it wouldn't have made a difference. Whether it hit 50%, whatever, wouldn't have made a difference. As long as you are on the right side of the market's going to go your direction within a few candles of your entry. Otherwise, you're just wrong. Otherwise, you're just wrong. Okay? So hopefully that answers your question. But with that being said, now we can we can have our outro. All right, you guys be blessed. This is the last, I believe this is the last week if you are going to end up getting a funded account with Liquid. So that 30% off, I believe, is going to expire on Thursday. So make sure to use code New Year to get 30% off. Use that link in the description. And that's going to be it. So y'all be blessed. I will see you here, same time, same place tomorrow on Tuesday, the 27th.